What's up, everyone? Dylan here. I wanted to hop on and go over the trade that I took today. I took one single trade. It was on weekly Amazon 3,600 strike calls. I invested $17,000 into the trade and walked away with a $21,782 net profit, which is over 100% gain, which is phenomenal. And today was a huge milestone in my trading career. I hit 30 consecutive green trades. So this is my longest streak ever. The last 30 trades that I have placed and executed, I have made money on all 30. So, it's a really, really humbling feeling to have made it to this point, because today I told you guys that my longest losing streak was 9 months. Yes, you heard it correctly, 9 months. And I don't mean that I lost money every single day for 9 months, but looking at it from a big perspective, every single month for 9 months, I ended up red. So that really, really, really sucked. I thought about quitting numerous times, literally cried. I genuinely remember crying a few points because I knew I wanted it so bad, but I was digging myself deeper and deeper and deeper. And it was all self-inflicted. And what I mean by that is I wasn't reviewing my trades. I wasn't entering trades with a plan. I was FOMO trading. I was revenge trading. I was doing many different bad habits in those 9 months that acted as a burden for me succeeding. So, it sucked, and I learned from it. But don't think that if whoever's watching this, if you're in the same shoes as I once was and you're struggling, just know that if I could do it, you can do it. And trust me, I'm no motivational speaker, but it's true. I'm not some rocket scientist who created his own algorithm. No, I do very simplify. I have a simplified approach to trading, and I got out of the hole that I was in of 9 months consecutive losing. And now I'm here, so it feels really, really good. Like I said, it's very humbling, and it goes to show that if you put your mind to it, anything is possible. So without further ado, we'll get into Amazon. So Amazon, I gave you guys this level before the market opened. Hold up, I just opened my mailbox. Did not mean to do that. All right, so at 9:24 a.m. Eastern Time, 6 minutes before the open, I gave you guys this level, okay? So Amazon 3551 was a level that I have been watching for a while now, a few months. The reason behind this level is very, very, very clear. And I highlighted it in the intraday commentary, but I'm going to do it again right now. So as I've been saying, my trading approach is very, very, very simple, okay? Anyone with eyes, anyone who isn't blind can see that, where I got this level from and the significance behind it. So 3551, right here it says 3554. Let me change that to 3551. You could have used either one. All right, so anywhere near 3550 had the same significance. So there's 3551, and you can clearly see that it has acted as resistance twice, okay? One time in September 2nd, 2020, and the other was April 30th, 2021. The most powerful breakouts have this characteristic, okay? And the characteristic that I'm talking about is the fact that they test a certain level over many months, okay? So don't get me wrong, short-term levels can work well too, but the fact that Amazon tested this same level twice over, what is that, 7 months, and was rejected both times, that made me realize that this was a very significant level. Okay, so you could see buyers over here. Buyers were able to buy up the price and push value higher. And then as soon as it got to that level, sellers stepped in and pushed Amazon back lower. Okay, 7 months later, buyers tried to push value above that level yet again, and look at the result, right? So you could see it was essentially the same exact level as it did back in September of 2020. Buyers pushed it up, and sellers were sitting at that level, and they acted as a ceiling, and were buyers were not able to break through the wall of sellers. So as a result, the price declines. So what I was looking for is a strong break above that level, and I was speculating a move higher into all-time high territory. So my target for this particular trade was 3,600. Why? Because it's a whole psychological number. So a lot of traders tend to gravitate towards those whole numbers, 100, 200, 300, 400, those type of levels. So that was the reason why I picked 3,600. Partly, like I said, because it did not have any, it was going into uncharted territory. So, Amazon didn't have any resistance above 3,551. It didn't have any supply zones. It didn't have any past history in that area. So that's why I chose 3,600. So you could clearly see here that when Amazon broke above this level today, look at the outcome that we got. Monster move. Absolutely monster move. Amazon was able to break above the 3,551 level and rally $125 to the upside. I missed, a big portion of the move, but I followed my plan, and that is all I can do as a trader. So, yes, looking at it in hindsight, I did leave a lot of meat on the bone, but like I said, I did exactly what my plan, said to do, and I executed accordingly. So you could clearly see that it was a very strong move higher, backed up with very strong volume. And we'll hop into the intraday chart in a little bit. Another thing that I wanted to talk about is the fact that Amazon has been lagging behind some of the other tech stocks, right? So Amazon just broke high of day, or all-time high, whereas Google has been trading at higher highs for the last several months, right? Apple, same as Amazon, it has not been able to break above prior all-time highs. Microsoft is at all-time highs. So you could see Google and Microsoft have been trading at new highs, whereas Amazon and Apple are lagging behind. So that was another thing that I speculated, right? I speculated that Amazon was going to essentially catch up to the other leading stocks of the S&P 500 and NASDAQ. So it had some catching up to do, and that's exactly what it did today. So after a long period of consolidation, Amazon broke above this key breakout level, and we got exactly what I was anticipating. So we'll go to a smaller picture. As you can see, this breakout happened very, very quickly. All right, let's maximize this. I'm going to go to a 1-minute chart. As I always say, I don't trade off of a 1-minute chart, but for the sake of this video, we'll look at it. So the price of Amazon broke above my 3,551 level in the second minute of the open. Okay, I actually entered on the first minute because I saw such heavy volume and heavy buying pressure. Okay, so I'm going to talk about a few lessons that I have seen people struggling with. The first is being able to see volume develop in real time. So a lot of you, this is a very, very tough thing to do. I am pretty good at doing it, but it took me months, if not a year plus to develop the skill set. So what I'm saying is, as this candle is developing, I'm essentially looking at the volume bars below, and what I'm looking for is this bar and this bar to both increase. Okay, so if I see the volume bar increasing, I want to see that the price increases as well. Because if the volume bar increases but the price decreases, that means that volume is for selling pressure. You see what I'm doing there, right? So essentially, and like I said, it's tough to multitask like this, and it takes time to understand, but what I'm looking for is a 5-minute candle, right? I'm on 1 minute to give you guys a clearer view, but I'm looking for the 5-minute candle to grow in size, to push value higher as the volume bar is also increasing. And that's exactly what I saw. So I speculated a break above my 3551 level, so I entered a few seconds beforehand. So I got in 10 contracts of the 3,600 calls at $17, which was actually late, right? So when the market opened, those contracts, I physically saw those contracts at $12, right? I believe they were even lower than that as the market was opening, but I started watching the contracts when they were 12, 13, 14 bucks, and I did not execute quick enough. So I wanted to show you a member that got in before I did, right? So you guys, a lot of you guys will see that I get a good fill and think, oh, well, how is he doing that? But I like to see that a member actually got a better fill than me. So congratulations to Yash. He's been killing it lately. If I said that wrong, please fucking excuse me, but I think it's Yash. So you could see that he bought the same exact contracts, the 3,600 strike weekly calls. He got in at $14.90. I got in at $17. So I actually paid $2.10 more for those contracts. I paid $2,100 more than he did because I bought 10 contracts. So congratulations to Yash. Like I said, I don't know if I'm saying that right, but he killed this trade. I mean, he got in essentially $15, scaled out his first contract at $25, then $35, and then again at $32, call it. So that's a phenomenal trade on his end. So like I said, you know why Yash was able to capitalize on it? Because he had a plan. Okay, that brings me to my next point. Okay, I saw a lot of people justifying their actions, right? They were essentially blaming other outside factors rather than taking accountability for themselves. So two big excuses that I saw for this particular trade, right? One was the fact that it happened in the first 5 minutes of the open, and two was the spreads, okay? Both are bullshit excuses. Yes, I said it. They're bullshit excuses. You guys, what some of you guys are doing is you're justifying your own mistakes because you're not owning up to, the fact that you failed to do what I've been preaching to do, for the last year plus, right? So what we as traders are supposed to do is make a plan before we enter. Guess when I made my plan for this trade? I made it before 9:20 a.m. Over 10 minutes before the market even opened, I knew exactly what my trade plan was going to be. And I guarantee Yash did the same, okay? So my plan was, I always talk about this. The plan should consist of three different things: entry, stop loss, and targets. Okay, so as I said, my entry was 35.51. Okay, I was looking to enter on a strong break above that level. That's what I did. My final target was 3,600. And I did exactly what the final target should be, right? I held some of my contracts until my final target was acquired or, reached, whatever the hell you want to call it. My stop loss for me, this one was kind of tough because there wasn't really any clear levels to use. But for the sake of this trade, my stop loss was around 35.43-ish. I know that kind of sounds half-assed, but it was enough for the trade to breathe, right? I was giving essentially $8 to the downside for Amazon to breathe, but my reward was $49 away. So if you talk about ratios, I guess it made sense, but this was a tough one to figure out a stop loss for because there wasn't much market contextual details to base off, to base the stop loss off of. So I came up with that plan 10 minutes before the market opened, okay? And this is what I want to talk about, right? If the trade moves in my favor, guess what? I'm going to follow my plan, okay? If the trade doesn't work in my favor, if it goes the opposite direction, if Amazon does a fake out and reverses and goes lower, guess what I'm going to do? I'm fucking following my plan. Okay? So you guys saying like, "Oh, well, it happened in the first 5 minutes of the open, so I didn't want to enter." Who the fuck cares? I don't care if it opens in the first 10 seconds. As long as I have a plan, that's going to ensure that I am ready for any outcome. It's as simple as that, okay? So if the trade does go sour, it goes against me, guess what? I have a stop loss in my head, right? And what's going to happen when my stop loss gets hit? I sell. So, like I said, as long as you have a plan, it doesn't matter what fucking time it is, you obey that plan. Right? So another thing that I saw was that people were complaining about the spreads. The spreads were not wide at all. Okay? So this is what some of you guys fail to understand. I know for me, the spreads for me when I entered were about $1.50. And you would think, holy shit, they're $1.50. That's a lot. That's less than 10%. Right? Think about it. The ask when I entered was about 16.6. Okay? And the bid was 15.10-ish, right? It was moving quickly, but it was about $1.50, right? That's less than 10%. That's equivalent to trading SPY contracts with the bid being 50 cents and the ask being 55 cents, right? You see what I did there, right? So SPY, cheap contracts, bid 50 cents, ask 55 cents. That's 10% right there. Does that seem fucking wide to you? Right? Same with Apple, right? Apple, call the contracts, the bid is 80 cents and the ask is 88 cents. Does that seem fucking wide to you guys? That's the same shit that Amazon had, right? So it's all subjective. It's all relative, right? So yeah, they were $1.50 apart, but when you're dealing with $16 premiums, that's nothing. Now, if you're dealing with $16 premiums and the bid is $11 and the ask is 16, then yeah, that's a fucking problem. Avoid that at all costs. But 10% is nothing. So this is what I'm trying to say. People are trying to justify the fact that they missed out on this trade, right? I see, it happened too quick, or the spreads were too wide, or my mom was making pancakes and the fucking smell distracted me. Who the fuck cares? Listen, as a trader, you need to take accountability for your mistakes. If you always make excuses for your mistakes, you will never make it as a trader. I promise you that. Okay, so if you're gonna sit there and keep making mistakes and making excuses for those mistakes, you'll never make it as a trader. It's as simple as that. So, and it's all mindset too, right? So if you get into the trade thinking like, oh my God, the spreads are so wide, or oh my gosh, what if Amazon does a fake out, or oh my gosh, these fucking premiums are way too expensive, I'm not ready for this, don't take the trade. Okay, that's equivalent to a baseball player, right? Saying, say he's getting up to go swing the ball, right? Or whatever the fuck it's called. He's going to go up to hit the ball. If he says to himself mentally, if he says, oh my God, this is a great pitcher, I'm going to strike out, I'm going to strike out, I'm going to strike out, chances are he's going to strike out, right? That's what I'm talking about, being, having a sharp and strong mindset. If you lack the confidence and the comfortability, it's not smart to trade. So unless you have a fully structured plan and you trust your plan, do not take the trade. Okay, it's as simple as that. So this trade worked out phenomenally. I did exactly what my plan was set out to do, and I executed accordingly. So, like I said, I walked away with a $21,000 profit, and that's about it. So, if you guys have any questions, feel free to let me know. I hope I answered some questions. Just know that I don't sugarcoat anything, right? There's some traders out there that might say like, oh, well, you'll get it one day. No, fuck that. I am going to be straight up with you guys, and I don't sugarcoat anything. So the reason why I'm being so harsh, as some people call it, is because I want you guys to succeed. If someone is out there trying to teach you and they're not telling you the harsh truth, then they're not being real with you. So understand that trading is feasible. If I can do it, so can you. But you have to understand the mistakes that you're making and that the excuses that you're saying are bullshit, okay? I hear it all day, every day. People DM me and people message me in the chat, and they're like, oh, well, this happened, TOS was lagging, my Wi-Fi wasn't working. Fuck that. Come on. Take accountability and just own up to your own mistakes, okay? That's all I'm saying, because if you don't own up to your mistakes, you will never be successful. So when I struggled for the 9 months that I was consecutively losing, guess what? I was doing the same shit, right? I wasn't owning up to my mistakes, and that's why it prolonged to 9 months. If I owned up to my own mistakes and realized that I was the problem, I bet you that 9 months could have been cut in half. So once I realized that my mistakes were all self-inflicted and that I was the problem, and it wasn't the fact that my fucking broker was laggy, or the spreads were too wide, or I was taking trades that were too close into the open, all that is just excuses. So like I said, you are the problem most of the time, okay? It's your emotions, it's your lack of confidence, vice versa. So this is very simple stuff for what I do, but the hard part is working on the emotional aspect of trading. So anyone can do it. Like I said, I have full belief in everyone that is on this very hard and challenging journey. But keep doing it, keep working hard, own up to your mistakes and review, and I promise you it's feasible and you can get to where I'm at now. So peace out. If you have any questions, feel free to message me, DM me, comment below, like the video, whatever you got to do. All right, peace out.